Good day, colleagues. Good day, everyone. I want to share with you this NASDAQ since I've said that should only one setup goes wrong in the previous video, then we have to relook at everything. We have to reanalyze everything. So here I am now again, giving you the new analysis on NASDAQ, because the previous one didn't go according to our analysis, and again simply because it is post Wednesday. If ever your analysis are not going accordingly by Wednesday, then you have to change everything. You have to relook everything, because you now have a new direction. Then there must be a new setup on your NASDAQ or whatever thing that you are trading. Okay, so let me not waste much of your time. I'll jump straight into NASDAQ and give you what I see. Okay, on this naked chart, I always use naked chart, and I always start on higher time frame that you know by now. Then on higher time frame, we easily identify this break of market structure right there, which left an order block here, um, right here, yeah, of which we still expect price to come and trade and trade on it or respect it. And then again, when you go to H4, I'll be quick on this one, because this thing I've explained it last time. I'm just doing the reanalysis of the analysis now. So the markups by now you already know them. Okay, we are on H4 now, and then as you can see, the current price action is very much far from this order block. So what do we do, since we refined it to H4? Then now we can highlight this order block inside here, and order block inside the order block, of which is very valid. Number one, it is far from the current price action. Number two, it has an imbalance here. Let me just pull my fib to show you where the imbalance exactly is, so that we talk about practicals, not something that we see, but it is not there. Okay, so yeah, where the Fibonacci is, it's where the imbalance is, and then again is far from the current price action. As you can see now, we're on 15,647.45, and then the entry of this order block is at 14,832.48, and then therefore this that on its own validated this order block here. Okay, and then again, confirmation number three of this order block is that it has a lot of volume after it price just pulled with big bullish candles, not small bullish candles. And again, we do not have much wicks. We do not have much wicks on the second bullish candle. We only have the wick at the close, but not at the opening. So that validate this order block. It shows that there are more prices that needs to be fetched down here. Okay, so again, as we go up, we see another imbalance here. Yeah, here we see another imbalance here, which price must come down and fill this imbalance here, and then again price must come and to fill this imbalance here. Okay, and then after that, if we pull our Fibonacci again, we have another imbalance here, of which we expect price to to come down and fill it. And then again, if we drag our Fibonacci again, we have an imbalance here. We expect again price to come down and fill this imbalance, and then again we have this big imbalance here. We expect price to come down and fill it. Let me just put it exactly. Yeah, sorry about that. Yeah, here. So with that said, so we expect price to come down and respect this or this bullish order block here, given everything that I just mentioned now. Okay. So now what then do we do at the current price action? What do we see on H4? It is not clear what's happening. We can, okay, yeah, I just zoomed up. Uh, I just zoomed in once so that you'll have a bigger picture. Okay, so as we all know that I use naked chart, I do not use indicators or anything. I have to identify what I see at the current moment. I have to tell you what I see. I do not have to use any indicators. So with that said, on H4 it is not clear what's happening. So what do we do? We go down to H1. Remember, we still have this order block that is from daily time frame, and then the order block inside the order block is for H4. Okay. So now on H1, at least now we have something. What do we then have? We have this break of market structure here. So before you ask yourself, why don't I mark this break of market structure here? It's simply because this is NASDAQ, and NASDAQ is always bullish. Whenever we sell NASDAQ, we only sell the pullbacks. Okay, so that is why I did not mark this break of market structure here for now. So just stay on the video and see if we're gonna mark it or what. So again, what else do we see? We see another break of market structure right here. Okay, after this break of market structure, after the break of market structure, we always identify the order block. Okay, and then in this instance, we'll have to take from up here, from the opening here to the closing of the week here. Why from here up until here? Because on a higher time frame, this is just one bearish candle. Okay, this is just one bearish candle, and this one has more wick than the body, and this candle here has more body than the wick. So what then do we do? We always have to use the candle that have more body than the wick, and in this instance we have two consecutive bearish candles. So what do? We highlight them both up until here. Let's change the color. um Royal B, yeah. Royal B, okay, yeah. Okay, and then if ever we extend our rectangle further, we now see why price came down into this level. This is a bullish order block on on H1, and this order block is for the micro structure. Okay, so we have a macro structure here and we have a microstructure here. So this order block is for the microstructure. Okay, so with that said, then let's refine this further. Let's go to M15 and see if we can find something that can give us an entry or what. Okay, we are now on we are now on M15 time frame. Okay, let me just put this exactly here where it should be. Okay. We are now on M15, so this we marked it. We marked this on H1 time frame. Okay, so now on M15, what do we see? We can easily see another break of market structure right here. Okay, so at the break of market structure, what do we have? We have an order block of which we have to highlight from the opening of the candle till the close, and then we have to will change color again because we're on a different time frame, so we have to know which color is on which time frame. So okay, I think we use this on daily time frame. So yeah, let's take this one here. Okay, yeah, so we have a new, not a new, I mean we have another order block after we refined everything on M15, and then at the break of this market structure, what do you have? Do you have another break of market structure? Will this a macro or a micro? Remember, this is a macro break of market structure on H1, then this is a micro break of market structure on H1, then this market structure, the break of this market structure happened on M15. So let's see if we can find another structure inside the structure. Okay, so what do we do now? We take it from here. Okay, we take it from here up until here. Okay, the is this trend line thing. Okay, yeah. So we have a microstructure inside a macro on M15. Okay, we have a macro structure and a microstructure in M15, and then immediately whenever we see the break of market structure, we highlight the order block immediately. Okay, so this is the order block after this break of market structure. So what do we see? We see price pushed up and then came back to respect this order block exactly here, exactly at the tip of this week here. Okay, so it is so important that whenever you highlight the order block, take from the opening to the close, and from the close to the opening. Okay, it is so important because if ever we took the 50% of this candle, as others say, then we would not have been in the trade for now. Okay, so what then happens after this? What then do we have now? Let's see. Since our current price action here is this NASDAQ going up or going down from here? Okay, that we do not know yet, so we have to check. Number one, where is the equal low or the equal high? Do we have an equal low or equal high? Number two, where do you have an imbalance on these other blocks here, or do we have an imbalance somewhere up here, and do we have an equal high, or do we have an equal low? Okay, let's first check this one here. So we do not have an equal high, number one. Okay, let's check for equal lows. Let's check for equal lows. We'll take from this candle here down to here. Let's put it straight. We have to be sure. I do not want to guess anything. As you can see here is clear. We do have an equal on the sell side. We do have an equal low from here to here. This candle here and this candle here, they gave us an equal low. It's exactly equal low. It is not next to an equal low. So then what now do we say? Do we say that NASDAQ will drop immediately or NASDAQ will go up first? Let's delete this one here. Okay, we're on M15 now, so we have a confirmation that we expect price to go down. And why do we expect price to go down? Simply because below this equal low, there's liquidity that needs to be taken. Okay, below this equal loss, there's liquidity that needs to be taken. Okay, so whenever price drops, where's the next point of interest? Then we have to go back to H1. The next point of the next point of interest is then this order block here. which is not yet respected on H1. Remember, we analyzed this on H1, so we can not have the point of interest of H4. No, it cannot be. We analyze this on H1, so our point of interest is on H1. Okay, so this is the next stop for NASDAQ. Should it drop from here? Okay, in fact, after it dropped from here, not should it, after it dropped from here. Okay, so but then where is the entry? What then what then do we do now? Let's go back to our M15. Yeah, we were here on M15, so we have now to focus on what's happening here, because on the left, so we marked everything, highlighted everything, so we know what's happening. We have the bullish order blocks which are not traded into. So now let's refine this thing further. uh, okay, before we do that, now we can easily see another break of market structure. Okay, the break of market structure, always have to trade on the direction where the structure broke into. Okay, always have to trade on the direction where the structure broke to. And where's that break of market structure? Is this one here, is this one here. This is the break of market structure on M15. Okay, this week here, up, and then price came down and violated the structure. So this is the break of market structure here. After this break of market structure, what do we do? The same thing over and over again. So in this instance, this candle here is our point of interest here. This candle here is our point of interest. Up here, let's change the color, because it's another time frame as well. Yeah, let's change the color to khaki. Okay, here, up here, it's our point of interest. And why is it our point of interest? We have this previous high that was taken by this stop hunt here. So after the stop hunt, what do we expect? We expect price to return to origin. And where's the origin? Is this one here. Okay, so these are our point of interest. So expect price to go up and then go down again. Okay, and why should price go up and go down again? Because there's liquidity here which needs to be taken. Therefore, it cannot be taken if price didn't go down. So price definitely have to go down to clear all the liquidity here. Okay, we are on M15. Let's refine everything further down to M5 if time allows us. And if ever the structure uh will allow us. Okay, on M5, after we refine everything again, we can see another break of market structure. Remember, now we are focusing on what's happening here, because we already saw that there's equal lows which need to be taken out, and we have a bullish order block which is not traded into. So whenever we refine everything down to M5, so we can clearly see that we have this here, this this a break of market structure. And then at that break of market structure, always do the same thing over and over again. And then the point of interest in that break of market structure, in this break of market structure here, will be this candle here, this candle here. Yeah, this candle here. And why this candle? Because it took out the previous daily high. So this is stop hunt, and after the stop hunt, we expect price to go back to origin. So if ever we pull our rectangle further, and then okay, no, we have to change this one. We have to change this one to orange red. Yeah. Oops, it's red. We cannot see the bearish candles because um pink. Yeah, It's fine, pink. Yeah, so we expect price to return to origin, and where's the origin is this candle here. But again, the candle that formed the stop hunt is the one that is more important. Okay, the candle that formed the stop hunt, it is the one that is more important, and which candle formed the stop hunt is the one that we just highlighted. Yeah, so now we expect price uh, we, we we now then expect price to go up to come up to this here, and then go down again to clear all the liquidity that is below. Okay, so this is what I see on NASDAQ at the current moment. And then again, as we can see here, let's quickly see, we have another break of market structure here, just here. And then our candle of interest is this one here, the last bullish candle or the previous daily high, uh, right here. But still we have to check the candle that formed the stop hunt, which is this one here. Okay, so remember, with the break of market structure here, so we can again quickly we spot the stop hunt here. So let's change the color. Let's change the color. I did not rehearse this. I just opened my chart and see everything. So this the candle of stop hunt. Therefore, if we extend it, as you can see, price came exactly, and it traded into this candle. So now what's happening? Price is going down, and then again, what we have another break of market structure here. Okay, after this break of market structure, our point of interest is this one here. Okay, this candle here. But still, this candle will not be respected. Why? Because you already have an equal low, and this candle is the one that formed an equal low. So so this order block will be violated, and whenever an order block it with a structure like this, uh, and then the break of market structure there, and then we have an order block here. So whenever price come down to violate this order block here, and then we expect price to go up to trade into it and then go down after this order block is violated. Therefore, this order block becomes a breaker blocker. It is no longer a mitigation block, but it becomes a breaker blocker, because if ever price just respect this order block here, and then goes back up again, therefore this will be a mitigation block. But in this instance that we have here, in this scenario here, we expect price to come down to violate this order block. Why violate it? Because there's so much liquidity below it, and then we expect price to return to it and trade into it, and then goes down again. Okay, so that is what we're expecting to happen with the price action of NASDAQ. All this that I'm explaining now, we expect it to happen only on M15 time frame. So if you're a scalper, so this is your opportunity to seize the moment and the scalp on M15. So when we go back to H1, our analysis time frame for today, our point of interest then is this one here. Okay, that is our point of interest, and that is 15533.35. That is our point of interest. Should anything that we saw on M5 goes accordingly, and then that is your next stop. So again, I just see some equal lows here. I don't know if okay, let me zoom it. Let me zoom in, I mean, not zoom it. Let me just zoom in. As you can see, we have an equal high here. Did I say equal low? Yeah. I think I said equal low. Sorry about that. We see an equal high here, of which this is a confirmation that price sooner or later will come up and take all the liquidity that is above here. Okay, so yeah, that is what I see on NASDAQ M5. Yeah, on the entry time frame for scalpers. So for any question, please feel free to comment and ask below. Cheers.